Hey everybody, it's Mark Yagi. Welcome to another Market Pulse. Today is I think it's the 1st of November. Happy November. Hope you're doing great. We've got a red market. So if you were in the market yesterday, boy, you felt it. It was one of those painstaking little markets. But let me see what we got here. And let's start a couple of slides for you. So yeah, we are very red. You can see three red lights. And the green is about to flip too on our primary trend. So we're going to have 4 red lights, which means be cautious. That's really what it means. It's better to lose a little bit of money than to lose a lot of money. So, we might have had it down yesterday, but don't try to be a hero and catch the bottom. We are selling off right now, and I'll show you that in just a second here. So look at the NASDAQ. The NASDAQ hit the all-time high 3 days ago, gapped down yesterday on heavy volume below the 8-day moving average, 10-day moving average, and it's still above the 50, but it has sold off and it's widening its trend. So the move there looks to me right now to be slightly to the downside. This isn't like a big, huge sell-off yet, but we are selling off. Big gap down yesterday here on the S&P 500, bounced off the 50 today. So that's really good stuff right there. The Dow Jones, gap down below the 50, bouncing above the 50 today. Very constructive. The New York Stock Exchange bounced down below the 50. It's right at the 50 today. Very constructive. So we've got some little pullbacks, which markets are going to do. And then we have some constructive bounces. Does that mean we're going to do another test of the 50? Probably. We are red. So that when you're red, trends start to take over and people are starting to sell rather than buy the dips, those kinds of things. The volatility is up a little bit, but not incredibly much. It's just above the mean, which means the panic is setting in a little bit. More selling is happening than buying. So you got to watch out for that. The big caps are kind of in a little bit of a consolidation, but I would say more downtrending. So the big money is selling out of the big caps a bit right now. That's why you're not seeing these markets move up this week and you're seeing them possibly gap down. If you're in the pharmaceuticals, you are in trouble because this is the chart of the pharmaceuticals over the last several weeks, and it has been a severe downtrend. And now we're down on heavy volume. A couple of days ago, we're down below the 200-day moving average, so that's rough. Let's go through some widely held stocks, at least in my mastermind group. We've got some Apple. A lot of people have Apple, and we can see Apple now reported really good numbers, but there were some concerns about Europe or whatever. The stock is now down below its 50-day moving average, doing a nice little hammer candle here, but I think 213 is in play on Apple. I don't think there's any reason for the stock to go up right now, especially with the red market. Stock just reported earnings that were good, but like the stock's down. So now why would it go up? The selling is probably going to be happening over the next week or so. So be careful on Apple. If you're going to sell covered calls, maybe consider selling them a little bit deep. Tesla had numbers a couple weeks ago or last week, gapped up on huge energy on that, went up to the pivot point of 265, and it's pulled back below that on light volume. That tells us that there is some potential for Tesla to do a little bit of a bounce here. It's actually constructive on Tesla. Let's see what we have. NVIDIA, there's nothing wrong with NVIDIA, but I just don't think NVIDIA is ready for a breakout like a lot of people do. I think it's long in the tooth. It's in a late stage base, and you can see it went right up to that spot at 140.75, which is the breakout point. And it tried to break out, but it didn't have the juice to do it. So now it's coming back down the other side. And I sold, you saw my video, if you watch this, watch channels or you are subscribed to my newsletter, you saw that I sold the 130s. So, a lot of people are like, why don't you do out of the money calls? Well, this is why, because if you sold the 130s and the stock is now up, $3-4 today, but yesterday it was down those $3 or $4, you didn't lose any money because you were protected all the way down to 130. So that's why I sell deep in the money in these markets and when stocks have late stage bases. All right, on semiconductor, let's go. JP Morgan Chase is at the top of a consolidation and trying to break out, but there's just no love for any kind of breakout here, and there's no reason to break out. This is totally a Fed play at this point, and we'll see what happens. I mean, the banking sector is probably fine just because it's a Fed play. Merrill Holdings is below the 200, but above the 50. Yeah, with Bitcoin at an all-time high, you think Merrill Holdings would be a little higher, but it's not. But MicroStrategy's hit an all-time high again this week. So They've got some financial engineering going on over there. It's a really interesting play, especially if you do calls against it. There's some really good juice in that. Amazon had numbers, really good numbers, up 52% on earnings. And you could see a gap down and then a gap up. Really good stuff going on right at the pivot point. Amazon is a good one, probably, if you're going to choose to be long one. Meta doing its thing. I wouldn't worry about Meta. Let me just go down. I did a video a couple days ago on super microcomputer, and this was one that I talked about on September 6th, and I alerted you that it was most likely a short, and it had a couple of these dreaded H patterns, so I could point those out if you don't know what that is. But you can see, like, there's a line down there, and then the little H, is made. That's called an H pattern. And look at the gap down right here to create the bottom of that H. Then it consolidated for a little while, but this is the bottom of an H. So this is that H there, that consolidation. And then we had this big long H, and we look at all the gap downs going on this week. They've had trouble with their earnings, their numbers. Their accountant quit, said they don't trust management anymore. That's bad news, right? You could say that you like this company all the way because they make hardware for NVIDIA, but they're not NVIDIA. And you're starting to see that in the stock chart. This is one that is a dog with fleas. I have an account where I was short in it. It was painful because it kind of trickled back up short term, but then this week, with this action, I covered the short this morning. So made a bunch of money on that. I think I shorted it at 38 or 39 and bought it back at about 28 this morning. So you got to be careful in these markets. You got to be careful. You got to buy good quality stuff. And even if even if you have good quality, that's no guarantee that it doesn't go down. And it also means that you've got to look at the chart. You got to see where the energy is on the chart. I do courses and videos on price volume analysis all the time because I think price and volume and analysis and knowing how to read a chart is really important. You've had plenty of opportunities after the stock tripled, quadrupled to get out. The stock was giving you warnings all the way down as it was bouncing its way down like a ping pong ball. They're going down the steps, right? It gave you plenty of opportunities. And a lot of people didn't take that. They were like, well, it'll come back. It's a good stock. And they held and they held and they held all the way from the time that the stock broke out at 35.70 in February, all the way to round trip it. Now it's at $27. It's the biggest thing you can do in the stock market is ride something all the way up and then, have it go all the way back down and take that profit away. It's, it's a shame that it happened. Last thing I'll talk about is I did a little video on this one on the YouTube channel, and it's going to be in my tips newsletter next week. But Trump media, we got an election coming up, and if you think Trump's going to win, then this might be a proxy because this is where he's going to post. He's going to post on Truth Social. He's not going to post on Twitter. And because he owns like 60% of this company. So obviously he won't post on his competitor. He'll post here. And if he doesn't win, I don't see a lot of good stuff happening for this company, frankly. So it's a real big risk. And that's why there's a lot of juice if you want to sell covered calls on it or you want to sell puts. But this stock has gone down in the last 4 days. It's gone down, severely. $20, something like that. So you got to be really careful with these. We got an election coming up on Tuesday. Who knows if it's legit or not? We'll see. Who knows who's going to win? We'll see. It's going to be an interesting next couple of weeks, certainly next 5 days. Thanks for being here on the Market Pulse. I hope that helps, and I hope you have a healthy and safe weekend, and I'll see you next week. Take care. Bye.